So today, we're going to try and make sense of a market that's sending some seriously mixed signals. I mean, on one hand, you've got these individual companies making incredible, powerful moves. But on the other hand, the big picture economic forecast is kind of flashing some warning signs. So what is the real story here? Let's try and connect some of these dots.
And that right there is the big question, isn't it? We're seeing all these headlines about corporate brilliance, big wins, and smart innovation. But at the exact same time, major forecasters are telling everyone to be cautious. How can both of those things be true at once? Let's start by looking at why companies seem so strong.
All right, first up, let's get our boots on the ground and look at some of these corporate power plays. We're talking concrete, real-world examples of companies just executing their plans perfectly. And we're going to start with a huge move in the real estate world.
So you see this number, 1.18 lakh square feet. What in the world is that? Well, that's the amount of prime Mumbai real estate that Oberoi Realty now has the right to develop and sell, no strings attached. This isn't just a win for them, it's a brilliant strategic move.
So let's zoom in a bit. Oberoi is redeveloping a plot of land on Nepean Sea Road. I mean, if you know Mumbai, you know this is some of the most exclusive, high-end real estate in the city. So this isn't just about building another apartment complex. It's about cementing their brand at the absolute peak of the luxury market and making sure they have a pipeline of very profitable projects for years to come. That's a classic power play.
Okay, so that's Oberoi building for the future. But our next story is about a company clawing back some serious cash from the past, ending a legal battle that's been going on for years with a really significant financial victory.
Check this out. Goa Carbon just got a couple of really favorable tax rulings for assessment years that go way, way back. The first order gave them relief of almost 5.3 crore rupees, and the second one tacked on another 2.3 crore. This is money that's been tied up in legal limbo for a very, very long time.
So you add it all up, and boom, that's over 7.6 crore rupees. Now for a company, that's not just a number on a spreadsheet. That's a direct shot in the arm for their cash flow, it strengthens their bottom line, and maybe best of all, it puts an end to some distracting, long-running legal issues. That's what you call a clean win.
All right, let's switch gears, literally, and talk about the auto sector, because we're seeing two different but equally powerful stories of momentum here. On one side, you've got the sheer strength of a long-term partnership, with TVS and BMW hitting a huge production milestone together. And on the other, you've got pure innovation, with Mahindra dropping a world first. Both companies are flooring it. They're just taking different roads to get there.
Okay, so the stories from individual companies, they're looking pretty strong, right? You've got smart execution, big wins, but now we have to zoom out. Let's pull back the lens and check the broader economic pulse. What does the picture look like when we step away from these individual success stories?
All right, let's look at some US economic data. That top line is what's really interesting. Durable goods orders. That's basically people and companies buying big, expensive stuff like machinery or cars. It came in exactly as predicted. But, and this is a big but, look at the number before that. It was almost 3%. That's a huge slowdown, and it suggests the industrial part of the economy is starting to cool off.
But then, you look at the job market, and it's telling a totally different story. Fewer people are filing for jobless claims. That means the job market is still surprisingly strong. So you've got this weird mix, right? Manufacturing is cooling off, but people are still working. And that's where all the confusion and uncertainty starts to bubble up.
So with all that conflicting data swirling around, what does the future look like? Well, let's see what the big forecasters are saying. Bank of America just put out its outlook for 2026, and if I had to sum it up in one word, that word would be caution.
So Bank of America puts out their target for the S&P 500, 7,100. And you might think, hey, that sounds great. But hold on, that's actually only about a 5% increase from where we are now. And that question mark, yeah, that's there for a reason. They're basically saying, don't expect a smooth ride up.
And this right here, this is the core of the whole paradox we've been talking about. BofA actually thinks companies are going to do great. They're predicting 14% earnings growth. So individual businesses strong. The problem, they think the market's valuation, basically what people are willing to pay for those earnings, might actually shrink because money's getting tighter and the Fed might not cut rates as much as people hope.
And when you dig a little deeper into the report, you see a few other really interesting things. They're predicting a huge potential range for the S&P 500, a big shift away from consumer spending and towards capital expenditure, so things like building new factories and infrastructure. And maybe the most surprising thing, they're actually a bit cautious on AI in the short term, saying it's not clear how companies are going to make real money from it just yet. So, we've got strong companies on one side, a cautious market on the other.
But what happens when you throw a massive wild card into the mix? A huge, top-down policy shift that just changes everything for an entire industry.
This headline, wow. The Indian government is apparently thinking about opening up the nuclear energy sector to private companies. I mean, you have to understand, this is a monumental change. For decades, this has been a government-only zone. If this happens, you could see billions in private money flood in. It could completely change the game for India's energy future. A true game changer.
Okay, so we've looked at everything. Corporate wins, confusing economic numbers, cautious forecasts, and a huge policy shocker. What's the one thing you need to take away from all this? How do we piece it all together?
I think the best way to think about it is like a split screen. On one side of the screen, at the micro level, you've got these amazing companies just crushing it. They're building, they're innovating, they're winning. But on the other side of the screen, the macro picture, well, that's where the storm clouds are gathering. And then you have these wild cards, these massive policy shifts that could just pop up and change the whole picture overnight.
And that leaves us with the million-dollar question, right? In a market this complicated, who wins? Is it the bold company that executes flawlessly no matter what headwinds they face? Or does the big, broad economic trend always get the final say in the end? That's the real tug of war happening in the market right now.